Microsoft and Google earnings last night, they got crushed. Apple tomorrow after the bell. That is obviously the whale in the room. And I'm trying to think. Meta is tonight.
Meta's tonight.
Meta's tonight. My feeling is Meta got its eye off the ball and went off into this metaverse that nobody really cares about and got away from Facebook and Instagram. What are you looking at for Meta earnings, and what are you looking at for Apple tomorrow?
I don't care about Meta anymore. I don't think that it effectively has done since this move into the quote unquote metaverse away from its social media focus. This is a dead stock to me. This is no longer in those Fortress 4 that we were talking about. Facebook used to be that big institutional holding. You saw institutions get out of this stock in a big way at the beginning of the year after that first momentum move that started the year. People are like, I don't get it. I don't understand your business model. I'm out. And they left. And you saw a stock at the beginning of January go from 303. We're down to 137. This stock was trading at 375 or 350 about a year ago. So again, I don't care about them. I care about Apple because Apple's weight is 7% of the market. And I'm interested in Amazon as well, because Amazon and Apple, out of those two big companies, were the first out of those groups to turn around and say, listen, we recognize that we cannot be this high growth company anymore, particularly in the financial situation that we're in. Apple, a couple of years ago, started to focus on services. It started to focus on returning cash to investors. It started big buyback programs that can help people. That is a justification for keeping money in Apple if you are large institutions. And as I said, 403 ETFs compared to 300 last year. Lots of pension funds. The Swiss National Bank has a huge position in this stock. So everybody is kind of crowded. If this report is terrible and it sends everyone through the exit, you are trying to effectively remove the water from the Gulf of Mexico through a garden hose all at the same time. That pressure would lead to a significant downturn. That's the only place was where we get that 3,200 level. On the other side, on Amazon, Jassy, the new CEO, 3 weeks ago, a report was leaked that Amazon is changing its ways. It's cutting unprofitable business lines. It's getting rid of its brick and mortar stores. It's getting rid of certain drone programs. It is focusing on saving cash, turning that around, and returning it to shareholders. So I would not be shocked to hear about a buyback program at Amazon. I would not be shocked to hear the word dividend in the conversation, or at least to focus on their balance sheet. They are looking to attract capital for the longer term and to get through this current crisis as quickly as possible. And I think that this is really responsible management. And I think that a lot of large-scale institutions with $1 billion problem, if you sell Amazon, would prefer to ride it out and try to continue to grow with this company over time.
Garrett, it's interesting that you're talking about dividends, because yesterday we saw massive, and I've never, on some ETFs that I'd never heard of, DGRO, DGRO, IDV, which is the iShares Dow Jones International. I'm sure you've heard of these because these are the things that you look at and nobody else does, because that's what you do. Big, huge upside call buys in ETFs that focus on dividend growth yesterday. And you brought up a really salient point about, hey, maybe these companies are going to start digging in and announcing huge dividend increases. Other question is, and this was in my mind, is the Inflation Reduction Act. I believe there's some tax changes around stock buybacks. Could that encourage companies to switch from stock buyback programs to more returning direct cash to shareholders?
Well, I think it's a 1% tax on buybacks, so naturally, yes. In a couple of things, what happens? The one is a big misunderstanding of what people in Washington, they're like, oh, they're buying back their stock to prop up the price. It's not really necessarily true. They're buying back their stock because they don't know what else to do with it. I'm having conversations with small businesses in the alternative energy space right now who don't want to expand because of costs, and they have too much cash and they don't know what to do with it. So in this case, these companies, they're like, we have a lot of cash. We're sitting on a lot of it. We're not going to go out and buy a new company. We're not going to expand our business line. We're not going to put out a new model. We're going to have to return it to our investors. So the two ways to do it is to buy back stock, which is a smart thing to do to improve your balance sheet, or you hike the dividend and you increase the dividend. That can be a little dangerous because if you get into hard times and you got to cut the dividend, that alters the stock price for the future, and people don't like that. So yes, by effectively taxing buybacks, it is very likely that you're going to end up seeing higher dividends in the future.
All right. So for all that and more, all that brilliance, I'm looking forward to, I bet you're going to break some of this down today in a certain newsletter, in a certain, yes, at a certain website where only you, if you're smart enough to subscribe, can get that daily access to the brilliant brain, penguin sweatshirt wearing, gigantic, huge, smart guy, Garrett Baldwin's daily letter. I don't know. MidDayMomentum.com. Make sure you're checking it out every single day. I read it every day. Why wouldn't you? MidDayMomentum.com. All right, let's kick it to Vaz with charts by request. Garrett, thank you very much. MidDayMomentum.com.
Oh my God. Do you remember?